Hello, Warriors. Hugo, how are you? How's everyone doing today? Pretty wild December, huh? Not exactly in FX, but definitely in stock indexes, right? Okay, so here's your 4-hour NASDAQ. Putting in the negative day, it's, just started, but in between 61.8 and 78.6, whereas S&Ps have rallied to 88.6. Forgot who told me. I think it was Nick that told me S&Ps love 88.6. Anyway, so 88.6 there. Probably now everyone's saying it's a layup for new highs, and it could be, but the fact that NASDAQ is lagging, and then you have Russell that I think may have filled the gap yesterday. Let's see. Not quite. The gap is up here around 228, 229. So really, there are different markets happening everywhere. I think the Dow also is very strong. So we're going to see if the markets can handle another wave in interest rates. It's supposed to be bullish for them because when you look at the yen right here, Ryan, how are you? Christopher, nice to meet you. Hey, Ryan, I know that these things correlate, US dollar yen and yields, but I think it's pretty neat that you actually this time have a similar formation. Look at that, right? Looks like a head and shoulders right here. And, the yen looks similar, like an ascending triangle. They're both at, major resistance. If you get a breakout here, you're talking about the highs. How you doing, DJ? So, and, the 10-year, if this is a head and shoulders and you just take a neckline at, say, 48 with a low of 33, that's going to take you to 163, which I actually saw that there was some kind of gap up there at 163. Anyway, it's going to take you back up here to almost challenge the highs. So this looks like, it was like an aberration. And now we're on the verge of some type of breakout here and here. And if the yen could manage a breakout, it still looks like it could have a chance for one more high to put in a 3 up here. And then I just want to show you guys, it might be early, but I know it's a widely held stock. And you might want to consider, if not shorting the thing, considering starting to take profits in Apple.
Hey Dale, I want to let you continue here, but I met with Katie Stockton yesterday, and she was actually establishing some long positions, fresh long positions in Apple, and I was like, huh,
that's what makes the market. I know guys looking for 200 now with their new products that they're coming out with. I'm just talking charts here, but all I could say is I've seen this formation. Not all 3 drives work, and but it is kind of a warning sign when you're a leading stock, and you confirm here, you diverge here, but over 70, and then you make new highs with everyone upgrading Apple, and you're diverging for the second time under 70. So, to me, when momentum can't confirm twice in a row on multiple time frames, it's at least think about taking profits scenario for me. So, how many times have I been wrong in the last 4.5 years, guys? About 1,000 times, and maybe right once. Anyway, Katie's very good, and she could be right. I just wanted to make people.
No, I think it's, sorry, Dale, I think it's worth throwing out there because, you do have Apple, it's surging at the highs. And one of the things I'm a little worried about right now is I'm and this is the conversation we had yesterday. It's regarding the market more generally speaking. And if the market hits all-time highs, I wouldn't be surprised, because we've got everybody talking up a more aggressive taper from the Fed. Right. We just got some COVID headlines that came out today, pushing stocks into to try to break out above 4,700 in the S&P. And if the Fed says we're fine with the pace that we are tapering at, and they don't increase the taper, I mean, we're going to hit all-time highs. And plus, as long as inflation is hot on Friday, but not super hot, I mean, if inflation comes in and it's, let's just say, what are we looking at? 6.8%, I think, is what the market's looking at for annualized, like CPI. Is that what the number is? I have to go back and check. But I'm not saying get rid of all your Apple. When I talk about taking profits, it doesn't mean everything, especially long-term people. But there's nothing wrong with booking some profits if you've been long Apple. Before it was late to the party, and now it's the outperformer. I mean, there were things that were skyrocketing when Apple was dead. So I know everyone loves Apple right now. So it could go to 200. But it could also, I know everyone's saying it's a layup for new highs, Blake. And I know, I had guys like Dave Contrarian talking about a melt up to 5,300 sometime in the first quarter. So, and even Jim Welsh, he called it pretty good, 5% sell off and then new highs into the new year before a bigger sell off. So, and Jim's long-term bearish for, the middle of the year next year. So, it's just like everyone is pretty much back on the bull wagon. It's still a chance that we don't make new highs, or there could be a pullback. For sure.
I don't think, NASDAQ and Russell look that good. S&P, what could start happening now is the S&Ps could make new highs without NASDAQ. They could go to 4750, and NASDAQ may not make a new high. 4790, I think a lot of people were talking before the Thanksgiving. Anyway, just like every day, I'm not anyone's advisor. I'm just sharing what I see.
No, and I actually didn't. The only reason why I brought it up is just because it's fresh in my mind. And actually, she was the first person that mentioned Apple to me in a while, and I wasn't even looking at it hitting all-time highs. So I'm glad you brought it to our attention. So let's talk a little bit about today. We got the Bank of Canada coming out a little bit later, and I was going to ask Ryan, do you have any thoughts on the BOC today as that's coming? Because I was looking at some of the Canadian pairs, and we have. Let me get over to the Canadian yen. One of the things about the Canadian yen is we were, challenging this 38% retracement. It was like previous support, current resistance, and we were knocking our head up against there like the last couple of days. So you can see minus what just happened, but you can see the last couple of days we were just struggling around this 38% retracement. Previous support, current resistance. You can see that there's a spike low right here, spike low there. That was kind of holding us, and I was like, maybe this is just going to cap us ahead of the Bank of Canada. And then all of a sudden today, we're getting this little, move higher in risk. Dollar yen broke above 113.70. So if you're short some of these yen pairs, you got to be a little careful. So we got the Canadian yen moving. Also, the dollar Canadian looks like it's done sliding. I'm so, Dale, you know how you talk about, trading and, being right or being wrong or whatever it is. I mean, here I am 25 years later, and I tell you, I make some, mistakes when I trade, and it's common. The thing is when you trade, you make some mistakes when you're trading, but hopefully the mistakes that you made, fresh in your memory, so you don't do them as often, right? So, and then obviously
Tom Brady makes mistakes.
Well, yeah, of course, like, you know, a perfect example was like the dollar CAD. I was short earlier this week around the 128, and I think it dropped to like 127 and changed. So I made like 50 or 60 pips around here, and I knew it broke channel support. And I'm like, you know, I should probably hang on to this, but I got greedy and I said, well, I'm just going to take my, I think it was like 70 or 80 pips off. Some of the people remember from early Monday, and then we just continued lower. And it's like, why didn't I just take part of my profits and then just move the stop to break even and keep everything else? And that was just greed, and like that was like a rookie mistake. But you know,
sometimes I just get sick of being in the market and I want out.
Yeah.
I just want to, let it do what it wants to do. And then you come back and you do the post-mortem. And you know what, Blake? A very wise man once told me that they don't live in woulda, coulda, shoulda land.
That's right. We don't woulda, shoulda, coulda. But what we are dealing with here is we are at a 38% retracement of this entire move here, and the 161% extension of the last leg higher to new highs. So that comes in at 126.25, and we're finding support ahead of the Bank of Canada. So I wanted to get Ryan's 2 cents here. What do you think, Ryan, about the Bank of Canada coming up?
He wasn't here when I tried to talk to him earlier.
Oh, he's here.
He's here and he's unmuted, but
he's unmuted, but he does not say anything. But how about you, Stelios? Good morning.
Hey, guys.
Problems.
Mike problems. Everybody wants to be like Mike. Okay. How you guys
Is that
doing?
your dog, Mike, or Michael? No.
Don't you remember that? Mike Larry?
Yes. Yeah. We would.
Yeah. You remember that?
Of course. Mike Lowry.
Mike Larry. How you guys doing? Everything okay?
Good, bro.
Good.
Yeah.
So, Bank of Canada. I've been looking at the dollar CAD, and the way I look at it, I know I look at the bigger picture than people usually do. The range of the past months is 120 to 130. So we're right in the middle of it. What do I think about the Bank of Canada itself? It's a tough call. You have some central banks like the Bank of England. Today, again, they were talking about the Omicron being potentially a problem. They're talking about potentially, I think it's rumors so far, but potentially more lockdowns in the UK, more restrictions. So the pound is weakening. But
why are we getting good news in the US about that virus, and Europe's getting bad? To us, it looks like Europe's overreacting compared to what we're hearing. Yeah, it's contagious, but
I
doesn't
agree.
cause severe disease.
I agree.
It's weird, isn't it weird?
I had my third Pfizer shot this morning, and I was reading the headlines that the Pfizer boss said that 3 shots will cover you pretty much, but they're waiting for some final results or something. But the news overall is not bad, so I don't understand why the UK is so defensive. But again, I'm not a politician. I don't know what they're trying to achieve. Paul says media sensationalism. That's probably true. Yeah. So regarding the Bank of Canada, it's not clear for me. It depends really nowadays. It all depends on how central banks treat Omicron, because really this is the last remaining problem. Inflation is very high everywhere. 6.8%, by the way, Blake, is what CPI is expected year on year.
It's expected at what? 6.8%?
6.8, yeah.
Yeah.
So inflation anywhere, even in Switzerland, I was looking the other day, it printed 1.6%, and that's been like zero for ages. So inflation's high, jobs growth is pretty decent. Yes, we missed in the NFP last week, but still overall, it's not terrible. And wage growth also in the UK, in the US, it's rising. So theoretically, central banks, the last problem for central banks is COVID and Omicron and whatever variant comes up. So each government will try to play that card as they see fit. And it's a bit, to me, it looks a bit random at the moment, how they're treating it. So Dale, you're right. In the US, things, it looks like things are being treated in a much more positive way. And then you have other countries like UK and Europe as well. In Europe, things are more more oblique, let's say. So I mean, I don't know what to make of it. That's the problem I've got.
It's confusing. Yeah.
Yeah, I really don't know.
You know, my jaded self, I think they're waiting till after Christmas to give us some bad news.
Well, I think one of the things that we have to think about, is, talking about going back to the Bank of Canada and what they're dealing with. They're also, you got to factor in what's happening with crude oil, and crude has had a nice recovery. I mean, let's not ignore the fact that crude had let's just talk here, just from like well, I guess we can go from the highs. So we had a almost 27% decline in crude oil from the highs. That's a big move, right? So now here we are. Now for those of you that follow us in the ForexAnalytix chat room and the analysis, I am looking for a failure up here in the mid 70s for crude, but this is a previous channel. So that's going to be a channel resistance, but there's still some upside. I mean, if you go, okay, I see what you're talking about, Blake, but I'm still talking about a 3-4% rally in crude before it starts to get to some pretty significant resistance where I think it's going to turn over. 3 or 4% in crude can still, move the dollar Canadian, down towards what I think might happen today is down towards the 200-day moving average. I'm really hoping that the Bank of Canada is a little bit more hawkish. And if they are a little bit more hawkish and we could get, the dollar Canadian closer to the 200-day moving average or towards 125, I am a buyer down there. I think right now we are in, call it mid-range or, middle of the, I guess you can say it's mid-range. There's not a lot of edge where we're currently at to start establishing, good positions. As you guys know, as I just mentioned before, I was short, the Canadian, the dollar CAD. Well, here, I'll just use an arrow. A short up here, which made sense from a risk reward perspective. I don't mind being long down here from a risk reward perspective. Right here, where we're currently at is, it gets a little dicey. I think you have to be, more careful on your position sizing around these areas. So anyway, just a few thoughts. Any last minute thoughts there? I don't know if Kman's here. Ryan, hey.
Hello,
Kman, what's going on?
Yeah, good. Dollar yen
and by the way,
up, euro yen moving up.
Just really, we got the dollar yen finally breaking out. I just want to say, for those of you that are kind of newer to the F.A.C.E webinar, if you don't know Kman, there's Ryan. We added his bio to the team page, and also Kman is here as well. And if you guys want to read about Kman and who he is, he came over with the Forex Flow Live team. So anyway, sorry, Kman. I just want to throw that picture. I love your picture. You look like you're like you look like you're the 16-year-old bully.
I look like the Guindos.
What does that mean? What does that even mean?
ECB, the bookend.
He's Lagarde's Muppet.
That's awesome. And Ryan, hey, I'm glad your mic is working. So hey, well, let's not interrupt Kman. What Kman? What do you got for the BOC today?
Yeah, quick thought on the BOC. I think there's two positive risks in there. So the prior statement said that they were looking at the middle quarters of 2022 to do more rate hikes, but the data have been strong compared to other countries, and so now that we might expect them to pin it down to maybe Q2, even March, because we have a meeting in March, early March. That is one thing. Then there's a lot of talk about Omicron. They probably are going to mention it, but the labor market is nearly at relatively speaking, full employment is not at full employment, of course, but it's back to pre-pandemic levels as well. So I don't think there's any reason for the Bank of Canada to be dovish.
Okay, well that's good. So maybe it does push the dollar CAD below 126 and maybe get us closer to the 125 lower 125 handle. I'm hoping, but
yeah, I have a lot of traffic in the mid to high 125s. There's a lot of traffic on my fibs and stuff. But yeah, 125 is possible. Why not?
okay.
But I would
can I
rather
ask
be
you-
long Canada against something else than the dollar because I'm slightly built up on the dollar for next week FOMC.
You're slightly bulled up on the dollar. I'm sorry, against what?
FOMC.
Oh, for the FOMC. So, I mean,
Yeah.
how are you going to play that through via the dollar yen or
Dollar yen? Dollar yen is my favorite because we got ECB right after the FOMC, and my little hunch is that ECB will Fed style start to change wording and statements and the way of communication. Perhaps there's a chance. So I don't really want to run short euros into the ECB either. So
can you be playing the euro yen on the long side since
That's what I have.
it's okay.
I'm still long. Been playing this 127.50 support, half 3/4 support. So I'm still a bit long. I think we could get up into the 129s at least, 129, 129 and a half, perhaps into the ECB.
And you know, if you and just so you guys can see here, this is Kman in the chat room. This is in the trades room as we talk about, you know, the positions that we're in and what we're doing. This is obviously the general chat room as well. And so you can see all the conversations that happen. So you're hearing Kman right now, but that's you know, he discusses a lot of this in the trades room. So you know, I think you've got a good I think you've got a good plan going on, especially with this euro yen. I tried to play it on the long side last week. I got wiggled out just through this chop here, but I hear what you're saying. So appreciate your thoughts. Did you have any other final thoughts before Ryan can use his mic that finally started working?
Just wanting to add that we really have to try and filter out noise. The way I'm doing it is to keep reasonably small or at least not full positions, because there's a lot of noise. The pendulum swings really hard. We have seen 30 BPs in the 10-year move between 170 and 140. Those are big moves in normal times. So if we want to trade a plan, we need to adapt. And my style is just to adapt my amounts, and that allows me to keep it through those pendulum swings.
That sounds good. That's
Great
always a good
advice.
plan.
Reduce
agreed.
margin leverage. I have a song for you one day, Kman. Kman, I have one question. I remember you saying you made markets in markets that no one else wanted to trade. Is the USD yuan an important pair for you? Do you follow it? And looks like we're on the verge of making new lows here. Does it mean anything to the market?
And by the way, Dale, just so you know, that is a chart that I actually posted this morning. The US dollar CNH.
Yeah.
Right. I don't know where I put it.
Great
this
minds, Blake.
Great minds. But yeah, I was actually looking at the exact, I guess this is earlier this morning. It's right here. US dollar CNH. You can see all the
Ryan
charts
had
that
me
we posted, but
he brought it up, so I've been paying attention to it.
oh yeah. I mean, this is a big breakdown. So I'm sorry. I didn't mean to interrupt. I'm just
That's
saying
all right.
that. Yeah, go ahead.
No, that's
And-
all right. I was long as well because I really thought CNH shouldn't be here, but I moved out actually very early doors this morning when despite the rest of the dollars creeping up, dollar CNH never made it any higher. So I think it's just so guided by the PBOC that we're going to need to see really bad numbers out of China for it to really take off. But personally, I'm not using it as a judge for risk on or off. It's a standalone currency, unless trying to figure out what impact it might have on the yen, because Japan and China trade relations.
All right, and by the way, you know, with China is starting to, they are doing some, you know, some easing, if you will, with their, you know, the reserve ratio requirement cuts and everything else. Hey, Ryan, we just got a few minutes here. What are your thoughts ahead of the BOC now that your mic is working?
Yeah, I'm in pretty much
Kman.
agreement with everyone else. You know, I think it's more a case of, are the BOC going to reiterate their position, not get wobbled by the virus news, which I don't think they will, especially with the news coming out today that Pfizer, that the vaccines are effective. It's just going to be a question of, like Kman said, when are they going to potentially signal hikes? Are they going to be a bit sooner than previously? If that's the case, that's going to be a bullish case for CAD. I still think we could see down in those 125s. If they do take a more cautious turn, then, you know, we're going to turn the other way and go back up towards 127 or something like that.
Okay, so, you know, I guess based on what you're saying too, we were really pretty much mid-range. And look, yeah. I don't disagree with you, and I don't. Well, let me say this: I wouldn't mind shorting the dollar Canadian up here above 127, somewhere up in this neighborhood. I definitely want to be long dollar Canadian somewhere down here. It's just, you know, here we are, you know, as you pointed out, it's mid-range, so I'd rather be, you know, long down here or short up here. But where we're currently at, if you didn't catch that on the short side this week, then there's no sense in trying to, you know, really just step into the market right now. I think it is more. You don't want to guess.
Yeah, a trade now. So either the Bank of Canada's going to give us something that goes against today's theme and the risk theme and the virus theme. Let's say if they're a bit dovish, if that sends it higher, then that's going to be a rally you're going to look to sell and get onto.
Yeah. So I appreciate that, Ryan. Hey, really quick, just a couple quick updates regarding like the euro dollar. You know, the euro dollar, if you were in the chat rooms last week, talked about the euro, about this, we were trading up here around the 113.50, and in the chat rooms I was mentioning, hey, if we get anywhere near like 112.50, I'm going to start getting long. I did establish a long in the euro dollar, and if you use the patterns in play, you can see this is established earlier this week, you know, on the 7th, which was yesterday of December. I put in the pattern in play. Yeah, I did want to start buying as we were at the 618 retracement yesterday, below the 112.61 level. So I started, you know, getting long. I also want to point out the cable, because if you are not familiar with the cable where we're at, let me just point something out. And this is a freebie for you guys that are not ForexAnalytix subscribers, because we're still pretty damn close to when I let everybody know where we're at. This is the 38% retracement of the COVID move. So if you look at the COVID low to the post-COVID high, this is the 38% retracement. You know, there's another currency pair that I played on the long side on the 38% retracement. That was on Friday of last week. That was the Aussie when it was below 70 cents. I bought it below 70 cents. It's now at 71.54. So I'm on a really, and I'm in a sizable long too. So on top of that. So here we are at the sterling at the 131.60s. We tested that 38% retracement last night. We actually hit it within I didn't mean to do that. Within 2 pips of that 38% retracement. So depending on how you draw it, what feed you have, we basically hit it. Okay. And we, you know, my opinion is, as long as we hold above 161.50, I would not want to be short. And if we get above this dotted trend line right here, which is 132.60, I definitely would not want to be short. So because that to me would tell me we're breaking, we hit a new trend low, probably a lot of divergent relative strength intraday as we hit new lows. We get above that trend line, we're probably heading back to 134, maybe even 135 minimum. And that goes along with my thinking with the dollar index that is probably heading back down to 94.50 before we oh shoot, I didn't want to do that. Before, making our move back up in this overall bullish trend of the dollar index. So that's pretty much it. And that's what I got for you today. Now, you guys have to stick around because we have Mark Newton, who is not with Newton Advisors anymore. He's with Mark is now with it slipped the name here for a second. He is with Fundstrat now. And so I'm pretty excited to have Mark back with Dale. And I hope you guys are here you guys really enjoy the interview. Mark's a great technician. He's also a CMT like Katie Stockton that I talked to yesterday. By the way, if you haven't caught that interview on Trader Summit, you should watch it. It's right here on Trader Summit. Just go to tradersummit.net. You can see that interview from this morning or from yesterday, excuse me. So it was great. We got a lot of great interviews. New trade-off that we did last night with Pepperstone Securities is up here. That's a trade-off with Chris Weston and myself. Make sure you see that as well. And also I want to mention, if you guys haven't tried out ForexAnalytix, this is the time to do so. It's only $1 for 10 days. And I know you guys are thinking, well, I'm waiting for a New Year's special. Well, that's the thing. We are having a New Year's special as we do every year, right around the first of the year. But when we offer a pricing discount, the very deep pricing discount that we do offer, you do not get a trial. It's gone because you get such a great price. So if you really want to try out ForexAnalytix, do it right now. It's $1 for 10 days. This way you can, kind of test the waters, see what it's like. Jump in our chat rooms. I'm gonna show you one thing again. This is our chat rooms. Okay. This is I've been in front of my computer now for, I don't know, maybe 2 hours this morning. So this is where I got up. You can see when I got in front of the chat room at 4:49, it is 6:32. So you're talking less than 2 hours. And this has been a pretty slow morning. So you can see how active just the general chat room. I haven't taken you in the trades room, into the news and research room, the Forex flow room, the Spanish chat room. So you guys want to see how active our community is? It's only $1 to check it out. And we don't talk politics, and we do not talk politics. We do not talk about religion. We do not let people sell any products. They are removed immediately. It's only about the markets, setups, and trades and ideas. So we'll see you there. Anyway, I'm sorry, Dale. Didn't mean to.
No, that's okay. And and guys, if you're unsatisfied with the $1 trial, I had such a good year. I'll send you a refund. Okay, so go ahead. I mean, if it doesn't work for you,
how much does the stamp cost nowadays? It's like the stamp's got to. If you snail mail me $1, what does it cost you? Like 55 cents or 60 cents or something?
50% markup on it.
That's ridiculous.
Or I could wire it, and it could cost me $20 to refund $1. So I'll mail it. It's coming in snail mail.
Yeah, don't forget to adjust to inflation. It's about 50 cents.
Oh, okay.
Right. There you go. Hey guys, good luck today for the Bank of Canada. If you're in the ForexAnalytix community, I will see you on the private Morning Edge webinar in 45 minutes. Have a great interview with Mark. Mark, thanks for joining us. I'll talk to you guys soon.
Welcome back, Mark Newton. How are you, buddy? Got you on mute, buddy. I see your charts. There you are. Welcome back, Mark.
How are you, Dale? Thanks for having me. How's everything?
Good. So some changes in your life, huh?
Yes, sir. No, I folded my business and I joined up with Tom Lee and joined Fundstrat in the city. So I'm in New York City now.
Oh, great. So congratulations.
Yeah, thank you. No, look, it's always tough to scale a business when you're one man, and COVID. If anything, I learned that it's very difficult to COVID with nobody's in their office, everybody's at home. It's just tough to really build it, and so everything had sort of flattened out. It had a number of really good years, but then, this just sort of landed in my lap, and these guys have been looking for a technician for a while. So I'm happy it worked out. So yeah, it's
This
great
may
for
be
me.
one of Tom Lee's best calls, bringing you on. How about
Tom Lee's
that? Huh?
been very right on the markets for years. So to his credit, it's I talked to him back in November. There was a certain cycle that hit, and I said, there's a good chance that we could start to pull back, and he was kind enough to mention me on CNBC. So yes, I do a lot of CNBC myself, but it was nice to try to get that exposure right away from the get-go.
All right. Well,
Anyway.
I think that anywhere you go, you add value. How about that?
I appreciate that. Thank you.
All right. So, we're looking at value line, kind of like, is it analogous to the Russell?
Well, this is 1,700 equal weighted stocks versus S&P. So this actually peaked out in the month of June, and I thought this is just important to show, because technology has been so dominant in the market really since the month of May, where the broader market really has not kept up. And then we saw a number of sectors try to break out, and they all failed, and everything has sort of pulled back. So, it's sort of an interesting market, to say the least, right now, where you've seen a lot of damage. This moved to the lowest level we've seen since March. Yeah. And a lot of the popular breadth gauges have really nosedived. We saw the percentage of stocks above their 200-day move down to almost 50% from in the 90s. So when you have, only half the stocks that are above their 200-day when the market's within 5% of its highs, it means we're in for sort of an interesting period.
Okay. I know when you use interesting, it usually means that there could be some surprises.
Well, look, I think we've seen a little bit of a surprise, but it hasn't really impacted the S&P all that much, as we all know. I mean, that's only down 5%, but anybody that's not owned, Apple and Microsoft knows that it's been a lot more painful than maybe what this chart shows of S&P. And so, I think everybody's sort of sick of seeing all that holiday red on our screens, and it's so early in December. It's not. It's a very strange time of year where it feels very different than most Decembers, where things just sort of melt up and everything.
December's a new October.
Yeah, that's right.
With thinner volume, so it's easier to move things around.
So we've had our first, decent push up after our little drawdown, and I'm actually expecting that we're going to sort of give back a lot of what we've done in the last 24 hours. I'd be surprised if we actually push back to new highs right away. I know the breadth was decent, about 5-1, but
88% up there, Mark, and NASDAQ 100 between 61.8 and 78.6.
Yep.
Didn't quite get there. So, and then Russell, like you're showing with the value line, didn't even fill the gap yet. That like value line didn't fill its gap.
Yeah, so this will be, the area right down near 4,600 or so, where if we get down under that, then I'd have legitimate concerns about this entire move from November really being replicated on another move lower, which could get to right around 43.50, probably at a maximum, and then we turn higher after, right around Christmas time, because there's a lot going on, I think, that week from the 20th to the 25th,
Dare I say the solstice, the Fed, a GAN day, all of that around there?
Yeah, there's a lot of, there's a pretty important cycle that hit back in the middle part of February and also in mid-June that seems to have affected technology quite dramatically, as well as a lot of the social unrest that we've all been feeling, and that rears its head up again in a couple of weeks. So, the last couple of times it was a top to the market. This time I think it's probably a good low, and we actually churn around for a little bit, and then we can have a pretty decent Santa rally into the beginning of next year.
What I wanted to ask you about, Mark, is last time we spoke, dollar, I don't know, it's trading 93, 94, and you had a 96 target on the Dixie, which was halfway back. I'm wondering if you've revised it to the upside, and do you think that if this is a bear market rally in the dollar, that we could be close to terminating, and the story for 2022 might be what people thought 2021 was going to be, and that's a big bear market for the dollar?
I
that
think that's
possible?
probably right. I think that, I need to see a little more. I think we're going to get over 97, maybe to 98, but not in the short run. I think that we've sort of peaked out back on the 23rd. So I think we're going to trace out a little, ABC type formation, and so that could take us down from, probably down to right under 95. And then we likely are going to start what I think is going to be a final push up. And at that time, that'll be really time to sell into everything,
Is a weak dollar going to be bullish or bearish equities? I mean, traditionally it's meant risk on. Will it mean risk on next year?
I think in the first part of 2022, it likely will. I think, with technology strength, let me just show you a couple things. So this is the dollar. I'm expecting a minor pullback over the next couple weeks, and then for the dollar to start to turn higher into probably 97.5, 98, and then I think we have a legitimate chance of really peaking out for this whole move. But with everything, we need to see trends break. My thinking with yields are that this move is complete, and we should actually turn higher and test 175, if not get above that, and start to maybe push up to 195, 2% in that. Let me see if I can share another
your
screen
charts that you're using now, Mark. They're very clean.
I use Optima, and I'm using TradingView. I use stock charts. I use a little bit of everything. So this is technology. This is something I always like to show, which is just equal weighted technology over the equal weighted S&P. And just since the month of May, it's really, tech has just been on fire. We sort of bottomed where we needed to, and now we're starting to really turn up again. And this is, we're set to break out of the highs of this entire trend since really the month of May. And that's really interesting at a time when tech is 27% of the market. And we can see it with what's happened with some of the semiconductors and everything else. But, this is what's happening with Apple. Apple has really been so dominant within the indices. And now that's starting to turn up and break this entire, trend channel, that we've seen. So interesting times. I think that we're at a time when growth is still going to show a lot of strength. This is large cap growth versus value. And so it's still going to pay to be in large cap growth. If you look at mid caps and small caps, it's not as pronounced in favor of growth, but certainly large cap. And EEM, I think, you're gradually trying to bottom out in momentum here. This is emerging markets versus developed. So I think you're going to start to see a time when the dollar rolls over. This is going to be pretty good for emerging markets, and we'll start to see this lift. So, that should make a good case for China and everything else. And small caps have just completely unraveled in the last few weeks. And now we're trying to stabilize here. And I think we can have a little bit of a bounce in small caps. But the broader trend is still pretty negative. And, we noticed that, of course, the Russell 2000 attempted to break out and that failed. And it really held where it needed to in the last couple of days, as well as value line. So those are pretty good areas of support for those. And I don't, we could obviously see a little bit of a bounce off that level, but just very interesting. And the Fang Index really explains it all. This is from November. So we gave up a lot of strength, but we really looked to a bottom exactly where we needed to in the Fang. We've had a good push off these lows on an absolute basis, but the relative, which is shown below, has really flattened out pretty dramatically. And so, it doesn't mean that, it's time to sell the group. If anything, we remember, if we think back towards the 1930s, over the next 5 or 6 decades, and everybody complains that Apple and Microsoft are too large of a percentage of the S&P. Well, we had, AT&T was the number 1 or 2 stock for about 6 decades, starting in 1930. So if you look at General Motors, General Electric, and we've had times in the past where we've had tremendous amount of concentration, in the indices, and that didn't necessarily mean that, the market was overdone or we needed to have a substantial correction. So this is not necessarily new news. It's really old news. It's something that we've experienced for the last 100 years. It's just in the last 20 years, it hasn't been as pronounced up until, the last few years, where now all of a sudden it's Apple and Microsoft and Google.
Okay. So I also recall from our last interview, correctly said that, not to look for you know, we were going to see new highs, and that happened. And 2021, you know, was going to be a good year, you know, because at the beginning of the year, there were maybe some different ideas, and you were a little bit more concerned about what might happen in 2022. You still feel that way?
Well, I think, you know, it's always, you know, I don't want to give away any of the secrets of my annual forecast, which will be released another month or so. But let's just say, you know, I still, you know, I think until technology breaks, it's going to be really difficult to claim that, you know, we can sell the peak and that we're going to sell off. I just want to see more proof of that. And so I'm a little more subdued. I think the weakness is going to happen in the first half of the year, particularly from March into probably July. And so I'll show you a chart real quick that
I've interviewed some people that, you know, super bulls that have melt up targets like, you know, 53, 5,400, and they're even revising those up because they believe that we're going to have a parabolic advance before it ends, and it's most likely going to be monetary policy that changes it. But that's a lot of upside from here.
Well, I think, you know, the market certainly has flattened out pretty dramatically, and you know, this is Gann's mass pressure index using my my different cycles. And I have about 5 or 6 in there. And so this peaked out in the months of really April, May of this past year. And we saw the bigger sell-off into October the 4th. This bottomed right on schedule. It peaked out in November, also right on schedule. And, you know, it's showing us pretty choppy in December. It's not going to be straight up until probably right after the solstice period into the beginning of the year. So that's my 2021. This is, you know, always something I think that people should pay close attention to. And so I'm going to be releasing in reports to clients, you know, what that looks like for 2022. And
did you develop that Gann mass pressure line?
This is a composite that is freely available through Optima, and you know, users can put in their own inputs as to the cycles they wish to use.
Right.
I would simply say that you know, just making common use of you know, looking at 10, 20, 30, you know, 50, 60, 80 year cycles and overlapping them tends to get pretty good results. But the 60 year is what's approaching, I think, next year. And that, for those that remember 1962, and the market actually peaked out in 61, but we had a pretty rough first half of the year before bottoming. So not to spoil the thunder, but I think the period between March, April, and July is really going to be, you know, could be sort of nasty next year. And so that's going to be, you know, the market could go sideways. I think it's going to go higher starting, you know, after Christmas, and we'll start to push up. But if anything, it's going to be a choppy first few months of the year, in my view. And then we have a little bit of weakness, and we'll see the extent of that weakness. You know, I'm not one that tries to sell the top. I'm always one that sort of calls out the price action as I see it. And if markets and technology start to break down, then it'll be proper to pay attention to that. But
are we getting close to some type of low in miners?
Yeah, that's a tricky call. I think that you know, as with everything, I want to see proof there as well of what's happening. And you know, I think gold is probably going to be close. I really want to see rates, you know, pull back along with the dollar at the same time. That's usually what sort of fuels the metal trade. And right now we just, you know, I think rates in the next few weeks are going to actually move higher. So
lower
metals. I think, you know, GDX, you know, if you can use 29 as a stop, then let me see if I can share. This is just another, we'll share this same screen with GDX. So yeah, it just makes for a tougher call as to why you want to be long, at least currently. But, you know, I think this is going to be plenty of time.
Yeah, I'd like to see one more low with a dollar high like you, Mark.
Yeah, I think that's right. I think that love to see a flush and buy into that. I think that the precious metals certainly have been the last to join the party of the commodities, and The move in crude is a little bit of a concern, I think. Any sort of further rally from here, and we very well could replicate that and have further weakness into early next year before we bottom out. So I share Tom Lee's view of being long-term bullish on energy, but we have had what I view as to be, a completed move up off the March 2020 lows, and this is just starting to correct. And so, we've seen the first move down, and now we're bouncing, and we'll see if this is replicated before we have the larger move up to the hundreds.
Okay. So I hope you're going to be able to freely express yourself at all times, Mark, because I think you have a lot of great insights that, you have to keep up an image, and you don't want anyone take a picture of you with a tinfoil hat on. I understand that, but you're one of the best technical, holistic, look at everything type of analysts that I interview. And one of our attendees wants one more look of your Dixie. If you can do that before you go, and everyone could still follow you. You still have the same Twitter handle, Mark Newton CMT. Anywhere else where they could get a hold of you or?
Well, I would say simply go to fsinsight.com. And so let me see if I can pull that up real quick and give you.
Okay, there you go, guys. There's the dollar. His dollar.
Let's look at the dollar real quick, and then I'll share some. So I think this is honestly how things are shaping up. And I believe you had Blake on last. I had fun talking to him a couple months ago, and so. I think he's getting long the euro, and so this pullback in the Dixie, goes hand in hand with exactly what he's talking about also. So I think you have a little bit of a correction in the dollar in the short run, and then we have a final push, and I'm not certain how. Based on where this ends, I'll be able to make a pretty good projection on what I expect and what how far this should run, but.
Yeah.
When you look at the bigger picture,
I think 98, 10, 61, 8 big. Yeah.
I do believe this is going to be the final push up of, and this is probably the incorrect labeling. It's probably, if anything, this is an ABC, and we're doing 5 waves up on this final, and we've finished 3, and then we're going to do 5. And so this is probably a little more accurate because this is not really all that much of an impulse.
Well, a weak dollar will certainly throw gasoline on the fire of what isn't transitory inflation, don't you think, Mark?
Yeah, I'd be interested to see exactly how that shapes up. I'm no economist, but obviously we all know parts of the economy are transitory and parts aren't. And so if the stock market starts to weaken the first half of the year, that's going to throw, a little bit of water on that argument. And also if crude oil has any sort of larger sell-off in the first couple months of next year, and that's obviously a huge component of how we view.
But it's such a small part of the market now.
Right, it's a small part of the S&P, but it's large in terms of how we view,
the global economic growth. Anything that you're worried about overseas? Like China or anything?
Well, I don't think China's going to be put to the test under this administration
until after the Olympics.
They're going after the wrong party. Unfortunately, I don't think Russia really poses much of a threat to anybody. And instead of going after the Ukraine, they'd be better suited to protecting the border of Texas, not the Ukraine, honestly. But that's my own personal view.
Okay.
I think. That's the big story these days is what is, if the Ukraine, if the U.S. pushes for Ukraine to get into NATO, that's not going to make Russia too happy.
Yeah.
I really don't know in terms of the geopolitical scene and what.
Yeah, I was just talking about economically what China was doing with, basically, taking down the proletariat and draconian rules in the markets, and I know they've come back, but some of the damage to their equity markets, and they're deleveraging that Xi is behind. I remember back in 2007-8 everyone was saying, well, you know, China wasn't affected by the housing crisis and the toxic paper, and they were still growing. And because of that, they're going to help pull the rest of the world out of this recession with the help of central banks, of course.
Right.
So if they can pull us out of a recession, can they take us into one? They're bigger now, bigger percentage of global GDP.
Yeah, that's a tougher call. I'm not really willing to weigh in on that. I don't know the world that way. I wouldn't be
pleading the fifth on me, Mark? Huh? Are you taking? All right, buddy.
Yeah, I would encourage everybody just to go to fsinsight.com. This is how you can reach me. And, you know, I publish a piece every day. I do a 5-minute video. If you look at FundStrat, that's just one wing that serves the retail arm of FundStrat. And so, you know, I work with Tom, you know, for those that like crypto analysis, I do my technicals and a crypto piece every morning. And, you know, I'd encourage everybody to, you know, take a look. And there's lots of great stuff, whether it be interested in quant or crypto or macro or, you know, we sort of have the gamut covered, as well as policy. We have our own Tom Block in Washington, who covers, who's an expert and has been involved with politics for the last, you know, 50 years or so. So
Tom is very reserved on CNBC when he comes on. Does he get wild at a Christmas party?
I'll tell you more after tomorrow night.
Mark, so great talking to you. I wish you and your family, you know, Merry Christmas, Happy New Year, and all the success in the world. If I was Tom Lee, I would have brought you on as well. So
thank you. I appreciate that. And best to you and yours and to everybody out there listening and tuning in. Happy holidays. And yeah, let's look forward to a good year. Let's get past all this craziness and hopefully we can all get on with our lives sooner than later.
Thank you so much. Mark Newton, everybody.
Take care.
Thank you, buddy. So that's a wrap for today's Wednesday, right? Yeah. Okay. So Mark was great, like usual. Thank you guys for your attention. Good luck today and good hunting. And in 19 minutes, you could go join the best team on the net in the Morning Edge. How many people took the $1 trial? I'm just trying to get together my cash in case I have to, you know, do any refunds. I'm counting $1 bills right now. So let me know if you join so I have my reserves ready. Okay. I doubt anyone will, you know, be disappointed. All right, Alexander, take it easy. Paul, Jeff. Thank you, Monica, Laura. Adios.